Everyone. My name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. Hope everyone's having a great start to their June. We'll get started here in about a minute. Going to let everyone log in and give some time there, but just some housekeeping rules. This is live, and I'm in our Atlanta office where the lighting's not so great, so bear with us. And if you hear anything, it's the account executives in the hall probably on phone calls answering customers' questions. But I'll introduce our subject matter experts here in about 30 seconds. But this is live. This is being recorded. We'll get this out before end of day tomorrow. Everything we're doing is on our website. So this isn't a PowerPoint. This isn't anything else. And like I said, it's being recorded. Put your questions in the question queue. And our subject matter experts will answer them. So with that, I get the pleasure of introducing our subject matter experts. And on our East Coast, Chris Barker. Chris, please introduce yourself.
Hello, Chris Barker. I've been in the world of non-QM for, I guess, 27, I shouldn't admit that, 27, 28 years. And luckily and gratefully been with Angel Oak for 10 years. And I love saying that because there's just no other place I'd rather be. I look at what else is out there and I go, this is a place to close a bunch of loans. And if I can drive any point home today is we close loans. Thank you.
Yeah, thanks, Chris. And then our other subject matter expert is Al Wooten in Michigan. Al, please introduce yourself.
Thanks, John. My name's Al. I'm an account executive in Michigan. I've been here for about 6 years. I'll be here for at least another 6 if you'll have me. I've been in the mortgage business since about 92. Done everything conventional, govy, everything under the sun, and I really like the non-QM and the borrowers it serves.
Yeah. Thank you, Chris. Thank you, Al. And again, my name is John Jiminod, EVP of Production here at Angel Oak. I've been here, in fact, this month, my 12-year anniversary here at Angel Oak. So, and like Chris and Al, I'm here until they don't want me here. So, I'm privileged to work with people like Chris and Al and all of our other account executives across the country because they do separate themselves from everyone else. Today, we're going to talk about second liens, whether it's a HELOC, closed-end second. We're going to talk about, give you highlights of them, what we're looking for, from a 1003 and a credit perspective. And then we're going to talk about a lot of the tools we have that makes your lives a lot easier. And then we're going to talk about the last thing we're going to talk about. So we want you guys to stay on is our marketing portal and how we have a lot of great tools you can use to market yourself differently from, the agency loan officer out there. So, but before we go into our products, we're going to launch a poll here, and I'm going to ask for Chris and Al's help here because for some whatever reason, I can't see the results of the poll. But we're going to launch a poll that's asked you, everyone participating on this call, have you originated a second lien in the last 12 months? And, while that's going on, I'm just going to throw out some stats here. 40% of the homeowners in the country right now own their homes outright. There's like 67% have a rate less than 4% and 85% have a rate less than 6%. So there's a ton of equity out there that people have in their homes. And, we can all sit here and say, oh, when are rates going to go down? When are homes going to start to move? Guys, you can create your own business going forward with second liens. And anyway, I'll be quiet. Al or Chris, give me the results of the poll.
All right, John. On the question, have you originated a HELOC closed in second in the last 12 months? It looks like we've got 60% of the folks, 63% of the folks have.
Okay, writing that down. Good. That's pretty good. And if you've created them in the conventional world, that's great. We're going to show you ways you can create that for your self-employed borrower or your seasoned investor. So, got to refer to my notes. Too busy talking here. So So Chris, let's go over the highlights of our HELOC program, please.
Well, the first highlight is, you can get into this with a 660 score. That's pretty easy. But you can also go up to, and this is, hard to get on cash out, 90% LTV. You do need higher score on a HELOC with that, with a 760, but it is there. Some really cool things about this product are, and I want to drive this one home. You can do this with an AVM. We don't require an appraisal if you are at 80% LTV or less, $400,000 loan amount or less. And I think we talked before this started, our average loan amount on these is 309. So these aren't your, average neighborhood $75,000 HELOCs. These are big loan amounts. These are actually, we had one of our top AEs do a data analysis last month, and he found this is a guy who does, how many loans does Scott do a month, John?
Probably 40, 50.
I think it's more like 60.
Okay.
70. Yeah, I mean, he does a lot. He does a data analysis, and his data showed that the loan amount for the HELOCs was larger than his loan amount for DSCR, and he's in South Central Florida area. It's I'll say this: if you want to get your volume up, your paycheck up, go on your President's Club trip, that's a great way to boost your volume where otherwise you couldn't touch it. But the HELOCs, just so you know, along the same line, maximum loan amount $750,000. So again, it's not your basic $100,000 small loan amount. These go way up. We also do first lien HELOCs. So let's say they live in a free and clear house, and they want some cash out. Let's say they're self-employed, which is certainly our sweet spot because we do both full doc and bank statement HELOCs for self-employed. But let's say they've made a ton of money. They've socked it away because they're utilizing the U.S. tax code to its fullest benefit, as they should, because it's there to stimulate these small businesses, and they've paid their house off. But it's time to start a new project, and they need $500,000. Where do you get it? Where's the best way to get it? Out of the equity of your home. So pull that HELOC. You can do it full doc. Let's say you're a W-2 guy or you're self-employed. We'll do it off of your bank statements. And that's a super easy and fast way to get an income determination. We can determine that bank statement income in 4 hours. So I don't think Fannie and Freddie can do anything like that. They take days after the disclosures in order for an underwriter to determine that income. We do it in mere hours.
Chris, I want to interrupt you there for one second. You mentioned it, and it's critical, right? It's that self-employed borrower, right? We've been closing self-employed first for a decade, right? And the average, I'm going to look at some stats here, Chris, that bear with me here. The average home is appreciated more than 50% since 2019, right? So, so there's a lot of equity there, and those self-employed borrowers, they want to use that equity to either grow their business or, as you mentioned, Chris, do some enhancements to their house. So, but sorry, Chris.
Well, I'm glad you interrupted, because there's a huge point that we need to make right here while we're even having this phone call. Okay. And I want you to remember these 3 points. Never in the history of mortgage lending have we had a perfect combination of these 3 things hitting that make the HELOC and second program and product that should be at the forefront of your head. Okay, here it is. Never before has this happened. Number one, we're never coming out of a period where rates were so low. So you got those 3 and 4% rates, and you guys know it. If you're looking to do cash out, they're always saying, I'm never letting go of my 2.99% rate. That's been going on since what, 2020? And
2020, yep, since COVID.
So this is your opportunity, okay? So there's number one. Rates have never been coming out of that period so low. 2, there's never been so much equity. What did you just say, John? 40?
There's over $30 trillion in equity, available equity in the U.S. today.
It's dead or untapped equity unless you use this product that we're getting ready to talk about right here and right now. Then number 3, the perfect combination is debt has never been so high. Think about that. You got the SBA loans. You've got credit cards at 22%. We're talking about second liens that don't interrupt or disturb that the beautiful 3 or 4% first lien. that is less than half what they're paying for their consumer debt. This is an absolute no-brainer. And today we're going to walk you through how to get a hold of that and how to serve those customers and put them in a better financial position while helping yourself grow your business.
Hey, Chris, not the last time I'm going to interrupt you, but
Yeah.
I'm going to. So you mentioned the AVM. So JD's asking, can we access the AVM before the submission, Chris? So have at it, buddy.
Do you guys remember the old Holiday Inn slogan, the best surprise is no surprise? Remember that one? That's a long time ago. I'm showing my age again, but
I remember it. So yeah, we're both.
So that's a great slogan. But what that means in our business is you run a pre-qual with us, which I think is absolutely an essential part of the mortgage business. So you know what you have and there's no surprises. One of the worst surprises that happens, anybody that's been in this business 2 or 3 years knows the worst thing that can happen is when an appraiser goes out and they do the worst job in the history of appraising and they come back in $100,000 low. We take that potential egg on your face issue out of the loop because we run an AVM. It pops back up within about 2 or 3 minutes of you running that pre-qual through our system. And we'll get to that in just a second, just how easy it is to use our pre-qual system. That it pops up on the AE screen. It says your property is worth $925,500. This makes your LTV this, your CLTV 85%. We know exactly what we have, or see it. Well, it's got to be 80% or less. So I should say 80%. You do not need an appraisal. There are no surprises. The best surprise is you know exactly what you have within minutes of running that pre-qual through that AE. Now, let's say it's a bank statement loan. Here is something that nobody else can do. It just can't. So it's a bank statement loan. You submit the bank statements within 4 or 5 hours. We will have an income determination back. Within 4 or 5 minutes, we will have a credit review by your AE. Within 4 or 5 minutes, we will have a decision on what the value is on that property. So the 3 C's of underwriting, credit, capacity, collateral, are done in 4 or 5 minutes, 4 or 5 minutes, 4 or 5 hours. Nobody else can do that. And nobody else can even do a bank statement HELOC anyway. So this is an awesome product. It's out there. Go get it.
Yeah, Chris, touch on a little bit, the interest only, talk about the terms for the HELOCs, and then we're going to get to Al. Al, we had you on this call for your expertise. I know you're chomping at the bit, so go ahead.
So on the HELOCs, we have 3 terms, 3 term options. You have a 25-year, a 20-year, and a 15-year. Now, on bank statements, you have 2 options, 20-year and 15-year. The way those play out is with a 25-year, you have a 10-year interest-only payment period. That's your draw period. So let's say you're that guy who needs to utilize cash for business operations, pay it down, redraw it, pay it down, redraw it. You can do it unlimited amount of times. And at the end of that 10-year draw period, you've got 15 years. It becomes a regularly amortizing loan where you pay back principal and interest. You can also choose a 20-year or a 15-year. The 20-year has a 5-year draw period, 15-year repay. The 15-year is a 3-year draw period and a 12-year repay. So you just pick whatever they like and whatever works best for their business plan, and you're there for them.
Yeah, great stuff, Chris. Al, anything to add regarding HELOCs before we jump into the closed-end seconds?
Yeah, I can add a number 4 point. So there's actually 4 things to remember. It's self-employed borrowers. Find one that doesn't want to have a credit line around. Guys that run businesses, they love the idea of having money around. Things get thin. They want to build their business. These guys love credit lines. So it's a great group to solicit with it.
Yeah, versus going to a small business, application, but right, the SBA route, right? I know Mo was handling questions behind the scenes here, but he always brings it up. It's so much easier to get this HELOC versus a SBA loan. So, but let's go, Al. Let's talk about our closed-end second lien here. And Chris, thanks for the input there.
Got it.
Thanks, John. The closed-end second, this just rounds out the HELOC product and offers everything. So, as far as your borrower can come to you as your one-stop shop, things are very similar. The FICO scores are very similar between the products, and we'll get into that in a second. You can also get an AVM on this. Crunch down that process. You've got an AVM. Also, title, you only need limited title if the loan amount's less than 250,000. So you've got somebody that comes in, and in the time frames that Chris was giving you on our pre-approval, we're going to give you, especially if it's a self-employed borrower, this is also good for full doc. You can get the income, so you know if it's available to do. You can get a property inspection waiver, and you call your borrower back later that day, next day, and say, okay, we can do this. We don't need an appraisal. All we need is limited title, and then our underwriting fee is $1,000 less. So this is a pretty plug and play product. As far as the closed end second, your in the door scores on this are, with the 660, and this is for all the doc types that we have. They're pretty similar on the FICO scores. 660, you're going to an 80 CLTV. With the 680, it goes all the way up to a 90. They're going to be $400,000 loan sizes at those FICOs. Higher FICOs, you get higher loan sizes. Loans up to $750,000. We got a minimum of $100,000. That could be useful because $100,000, it's the HELOCs minimum is $125,000. We've had them where the appraisals don't come in, whatever it is, we can get them switched over. You can still get your loan done. Now, when you're looking at the doc types on this, so this is the one product that we have 3 different doc types on. That's what I'm talking about, one-stop shop. You've got the full doc, obviously, then you've got the bank statement, whether it's personal or whether it's business, and then we also have a DSCR second. So when you're sitting down qualifying borrower, from the easy borrower that you're doing full doc on to the guy that walks in that has a spreadsheet full of investment properties, which I've seen happen many times, and you're figuring out, okay, we can use this product for this, we can use this for this, and help them. I've got a guy that sent me 11 DSCRs from the same borrower yesterday, 11. So they come in with a spreadsheet and they sit down with them. This product is extremely helpful when guys, especially guys that buy investment properties, they really care about how they're getting the cash. So, and this gives you a lot of options to do it. The bank statement, you're looking at personal or business. They own 50% of it, you can use business. They own 25% of it, you can still do bank statement if they big deposits in the personal accounts. You can do personal on it. Tricky thing you want to look out for, little things. Occupancy, they need to own the property for 12 months. They own the property for 12 months. That's fair game. We're going to talk about marketing a little bit later, but this is a fantastic, non-QM is a fantastic product for marketing. On your property types, it's good for single family home. It's good up to a 2 unit. The condos, we stick with warrantable condos, but if they have a non-warrantable condo, once again, we've got all kinds of options on other products that we have.
Al, I'm going to be equal with interrupting people. I interrupted Chris earlier. I'm going to interrupt you now. So, what I don't want to forget here is, if it's a non-warrantable condo, we still have cash out options for them. Yep. It could be a first lien. So I'm glad you really brought that up, because right now we just do warrantable condos, but if it's a condotel or a non-warrantable condo, we have a first lien option for them. So thank you for bringing that up.
We do, and if you look at this, 3 doc types on a second mortgage product, and then we've got all the doc types on the first mortgage product. If something doesn't work, that's where your account executive is very valuable. You call us. This is all we do. We look at this stuff all day. Don't be an expert. You want to be an expert at non-QM, just keep our number around, because this is what we do. I like doing this. I like finding ways to help people, to help the borrowers. That's what we're all here to serve the borrower, essentially. As far as the doc types, we've got the terms. You've got a lot of term options on this. You got a 30-year, you got a 20-year, you got a 15-year, you got a 10-year. When you're pricing it out, it's going to price on our pricer. The 20-year and the 15-year are priced the same. The 10-year and the 30-year go a little bit different in different directions. We've got rate sheets for that. And then when you're using the portal, you can price that. But the terms, there's lots of terms. There's lots of doc types. So there's a lot of different ways to get your folks done here. as far as the DSCR
Yeah,
second.
but before, I want to answer a couple of questions here, Al, before you get into the DSCR second lien. I want to, and I'll answer this one because I am located in Texas. Sean's asking, will owner occupied HELOCs be available in Texas? Sean, we are working hard on that, getting that done. But right now it's just second lien, second homes and non-owner occupied. But believe me, we're working towards getting that. And then Savis is asking, I'll ask this to you, Chris. Do you offer a first lien HELOC? And you mentioned it earlier, so Savis might not have heard that. Chris, if you could answer that question, please.
We do, and it works great. Yes.
Yeah. A couple other. Al, I'll ask you this. Are there any prepayment penalties? Bob's asking, are there any prepayment penalties on the HELOCs or second liens?
There are on the investment properties. So on the DSCR seconds.
Chris?
I believe that's correct.
What's that?
I believe he is correct.
Okay. I just want to make sure.
Yep.
Yeah. We have a matrix.
Only on the closed-end second DSCR.
Okay,
exactly.
thank you.
That's what's saying on the DSCR investment property. And we've got a matrix where some states limit it, some don't. And we can tell you when we do your pre-qual.
Right. Yeah, that's a good point. State by state. So great point, Al. So Al, let's talk about, another program, again, continuing enhancements, talk about that second closed-end second lien.
Okay. As far as the closed-end
DSCR, sorry, specifically.
Yep. We know we've got full doc and bank statement. We also have the DSCR second. The difference in the DSCR second, the FICOs and LTV requirements are almost the same. It's a 700 to 70 and a 720 to 75. If you do bank statement or full doc, you can get to a 75 with a 700 FICO. It's a little bit different, but as far what makes it, the qualification is what you want to focus on. You need a 1.2 DSCR ratio, and that's PITI on everything. So you look at it. If that doesn't work, then we can back up to full doc or the other product options. But there's a lot of things available. But what I mentioned before, I've had so many of these come in that the borrower, you're giving the borrower what the borrower wants. The borrower comes to you and says, listen, I need to get money out of these properties. You start with a DSCR second or a full doc second. That doesn't work. Them say, well, I'm not going to do a first mortgage cash out on it. That's, if they want their cash, they want their cash. So, because they're investors and, they're making moves that they know work for them. But
yeah,
as
so,
far as
Al, it's, and I go back to what you said earlier, if it's a warrantable, non-warrantable, we can do first. Here's a DSCR. If the property doesn't cash flow at a 1.2 ratio, we have the DSCR cash out options for them, right? And you mentioned it. They come in with 11 properties. Chris, I know you do multi-packs for DSCR. If we can't do the closed-end second for them via the debt service coverage ratio as an investment property, there's always that first lien debt service coverage ratio, first lien, and get cash out so they can continue to add to their portfolio. So let's look at, see some questions coming here in the queue, guys. So bear with me here for a minute.
John, while you're queuing those up, can I reiterate one thing that Al said that I think is just, we cannot overlook, and it's so important, is you can get 90% CLTV on these with a 680. So you keep your 3% first, and you can go all the way up, which might be 50% LTV. Go get the other 40% with a 680. Does that exist anywhere out there? I don't think so. Yeah. Just keep that in mind, man. There's a lot of room, a lot of bandwidth to pick up that debt equity that's sitting out there untapped. Let's go get it.
So, Chris, what's our fees? What's our underwriting fee for that? I forgot who's asking that. Mark is asking, what's your fees on the second liens?
Very reasonable, $795. That's all in. So there's no credit report fee. Matter of fact, there's no credit report. We're using yours. That's it. That's all in. $795.
And Al, JD's active on here. I think JD's looking to grow his business. So what's what's the minimum draw on the HELOCs?
On the HELOCs, it's going to be 80%. So
Yeah.
125,000 minimum loan amount. They have to draw 100,000 as their minimum initial draw.
Right. Keep the questions coming in, guys. So Chris, and Al, we've talked about, the great tools we have available to our borrowers, right? So Chris, unless you have something else to add regarding closed-end seconds or the DSCR seconds.
On both, and we're going to get to this in a minute, is the marketing piece. These are great things we've talked about, but it's like the movie Field of Dreams. If you build it, they will come. If you market this, that equity we have proven is out there. So please, 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 when we get to the marketing piece, get on that. But let's where are we going to next?
I'm going to talk about the blended rate calculator we have, right? So here under calculators, we have a lot of great things. We have a blended rate calculator. We have the DSCR loan calculator that's used for first. But, so I pre-entered some information regarding, an actual situation, right? An actual borrower. They come to you as an originator and they say their property values at $650,000. Their monthly insurance is $250. Their monthly taxes are $1,000. Their HOA is $50, right? So then we're scrolling down. You're putting in, like we said, if they've owned their home since 2020, the house has appreciated 50%. So let's assume these people, they have $250,000 left on their loan amount. They have a rate of 4%. It's a 30-year fixed, right? And then we have a second lien. Let's just say they're taking out $250,000 for a HELOC or a closed-end second. The rate's 10%. People will say, "Oh my God, I've got a 10% rate. There's no way." Well, I'll go over here, right? The average credit card rate is about 24, 25% and probably going up. I'll throw out some other there. Credit card balances over $1 trillion out there. Americans have paid in 2022. Americans paid 120 billion. That's 120 billion dollars in credit card fees and interest. Right? So we're putting in here 10% rate. Guys, so you have a 4% first, a 10% second. You're taking out $250,000, right? And this is your blended rate calculator. This gives you, as an originator, basically you're a true advisor to that borrower. So they might be a little hesitant on that second rate, but you're going to tell them $250, use at your discretion, and your blended rate calculator is really actually 7%. Think about that if you've got credit card bills, student loan bills, auto bills, all that. So I don't know, Chris, Al, anything you really have to. I see Chris taking the glasses off. He's getting ready to say something. So go ahead, Chris.
I mean, these are the things that I think about at 4 a.m. The good part about this is a weighted average figure, but you can remove the heavy part of the weighted average in time. So you have a 15-year or a 10-year second, pay that thing down. Then guess what? You're just left with that original 4% rate. It's unbeatable. They're not going to touch that 4 or that 3, but they sure as heck can do whatever they want with the rest of that equity. And that's the one that smartly they should chip away at and get rid of. But even still, that 7% rate, you're not going to be able to do a refi cash out there for less than that. And then it's a 30-year fixed, and you don't have the ability to wipe out that second and get back to that pretty little 3 or 4.
Yeah. And, I meant to say when you mentioned it earlier, Chris, when you said, their rates 2.99, low 3s, Eric Morganson says this best. These people are in multi-generational low rates, right? You're never going to see, I won't say never, but the odds are going to be catastrophic. And I don't know if I want to be around if that happens. Yeah. So, but yeah, Al, anything else regarding the blended rate calculator and the tools that we provide for?
Yeah, when you're selling this to a borrower, you can show them this, and you can also remind them if you're doing a HELOC, that HELOC is, let's call it interest only for 5 years. If you're doing that term, you're only paying interest on the balance. as you pay that balance down, you're paying less interest. It puts them in control of the situation of decreasing their balance, and they're going to pay less on it every month if they can pay it down.
Yeah. And like you
Payment
said,
goes down, John.
What's
So
that?
the payment goes down.
Yes. Thank you. Thank you. So, all right, guys. So we have this. Let's talk about, who do I have covering this? We showed the blended rate. So Chris, it's great. You talked about pre-quals. You talked about the AVM, getting the income calculated and all that stuff. So how does someone, and let's talk up the pre-qual process. How do you get rates, whether it's second lien rates or first lien rates? And then how do I get you to do a pre-qual?
Okay. So it's very simple, like could not be any more simple. John's already clicked on our website. That is www.angeloakms.com. The M is for mortgage, the S is for solutions, and that's what we're here to provide. It does not require a user access or broker ID or anything. You can do this literally on your cell phone driving down the road. I don't recommend it. Your insurance company will hate you, but I do it. Hopefully State Farm's not listening. But it's that easy. You don't need a user ID. There's no login. You just literally, and John, if you can click on that, let's show them a little bit what it looks like. But this is our beautiful website, a bridge over water. And so here's how you get started. To get rates, I would click on broker, and then here are your multiple options. I think this is your best piece of mortgage tech out there, better than DU, LP, any of that stuff, because this is Mortgage Solutions providing right here. You can do a bank statement loan, you can do a DSCR loan, you can do a HELOC, you can do a closed-end second, you can do an asset qualifier, you can do asset depletion, you can do a I-10, you can do a foreign national. I mean, you can do manufactured housing now. The list goes on and on and on. But the important part of what this thing does, it's not just a rate quoting tool. Most lenders like us have a rate quoting tool, but what their machine or technology doesn't do, it doesn't have the matrix incorporated into it. Ours does. It also has an AE on the other end of it that is going, did that pull the AVM? What is the property value on a HELOC or a second? And even on our other products, what does that property pull for rent? It tells you what the thing will rent for. No other lender has these things. So, John, whenever you're ready, go ahead forward with that. So another cool thing about this, with our matrix being built in, you can input what the figures are, and it will kick it back to you if it doesn't meet guidelines, if it doesn't match our requirements on the matrix. So it's kind of like having an AE in your pocket there if you put it on your cell phone or at your desk. A lot of times people will call me, and my first thing I say back to them is, are you in front of a computer or a cell phone? And they always say yes. And I say, go to quick quote at angeloakms.com. It's also, if you have trouble remembering, quickquote247.com.
Thank you.
Yeah, that one's pretty easy to remember. But as you can see, this takes about maybe 45, 50 seconds. I don't know how long you've been doing that, John, maybe 30.
I'm waiting on you, Chris.
So, yeah, I mean, it's that easy. You just input your loan parameters. The system immediately runs it versus our matrix. Do you have the credit score for, let's say you're asking for 75% or 80% or 90%? Do you have it? If not, it'll counter offer to what is allowed. I think here you look, what'd you ask for there, John?
I did a $300,000 second HELOC in the first position, 75 LTV, 780 score, owner occupied 1 unit, South Carolina, 24 months business bank statements. And and I did borrower compensation. And this is the rate stack, right, Chris?
Yeah. It's everything you need right there. And that did not take, I really don't think that took 60 seconds, but if you can scroll down just a hair to get to the bottom. So we're looking at 9.25 at true par. So fantastic. That's $300,000 of working capital for your, that's bank statement loan.
And yes, I did a 24-month business bank statement.
So think about that working capital for the self-employed guy. Boom, done. That's the first position. So
I mean, that's a $240,000 draw in their pocket, as Al mentioned, interest only. This is what you can do, and you can get your borrower an answer in a day or less.
Well,
Yep.
speaking of that, I don't want to go too far in advance, but you say in a day or less. So let's say the AVM hits, you don't need an appraisal, you know the credit, you can issue disclosures within 10 minutes of that. Really, if you're pretty slick in our system, 10 minutes and the disclosures are out the door. So you're in underwriting. It is not at all out of the question that you could close this loan in 8 or 9 days.
Exactly. So Chris, so we talk about the prequel. I know you, Al, and all our account executives across the country take great pride in doing that prequel. As Al mentioned a couple of times, I mean, this is what we do, right? We provide solutions for a borrower, and our AEs are basically your confessional booth, right? Tell them everything up front. So they're going to find a way, whether it's through a second lien or a first cash out or a first purchase, they're going to find a way to get that borrower either in that home or get them some liquidity back in their life. So Al, Chris, so how do I get my 1003 and credit report to you?
Well, just click on that rate. And it does not get any easier than this. So you literally just put in your AE's name, you select them in that drop down, and then you tell us a little bit about yourself. Put in the loan officer's name, the NMLS number, phone number, email address, company you work for. And then I say this is where the rubber hits the road. You literally just drop the 1003 and the credit in those boxes. Now, if it's a bank statement loan, you also can drop 12 months of bank statements. It might also up there ask you the address for the AVM.
Yes, yeah, that's a great point, Chris. I kind of just glided past that. So I think I did it on a first.
Yeah, one point about that. A lot of times people are hesitant to give that because they think it triggers disclosures. It does not. What it does is it triggers an AVM. So when the AE gets notification, which is immediate, the AE goes in there and says, it's running. I got, maybe a minute or two more. Boom, there it is. Your property value is $555,000. Your CLTV is X. But this is how quick this is. And again, you didn't even have to tell us who you were. I mean, really, in terms of logging in, you tell us who you are, but you give us the property address and the AVM run. So so much. I mean, what has this taken us? 5 minutes?
Yeah. And Chris, I think, I don't want to underplay it or overplay it, but I will overplay it. It's like you and Al and all the other account executives are pre-underwriting a file, right? So you're looking at the 1003. You're making sure everything's, kosher on there. You're looking at the credit report, making sure everything's there, whether it's the AVM, whether it's the bank statement calculation. You guys are doing all that heavy lifting up front, so you and your borrowers can feel really confident about moving forward with Angel Oak. So,
I think the important thing is the comfort level. So many people, I'll talk to maybe new LOs or LOs that have never done non-QM or seconds, and they'll say, I'm just not comfortable. I'm unfamiliar. I'm not confident. So, I think Angel Oak has the most tenured AEs in the industry, and each one of us will literally hold your hand from this stage right here. This is step one, all the way to closing. And we have an excellent account management team. We even have junior account managers that will poke at you and go, hey, when are you submitting that next document so we can get this thing wrapped up for you? So it's a great team effort, but it's also an effort that no one else, I think, excels to the same level we're at in terms of pre-underwriting that file, making sure that you're going to fly through underwriting successfully. And I think we have an 80% pull-through ratio. I think that's unheard of in the industry. The other 20% are appraisals that fail or a borrower that might get cold feet or something like that. We are, again, as I said in the beginning, we close loans. It's a great place to work.
No, Chris, go ahead, Al. Sorry.
John, I mean, I can make the pre-approval easy to understand. This is our AUS. We're giving you an AUS on the file. It comes back quickly. We actually do run things on the back end. We give you the income. Everything we're giving you in writing is good information that you can take forward. So it's your first step. and it tells you how to move forward.
Yeah, so you talk about Chris, 10 years here. I'm here 12. Al's going on 7. It's almost 30 years just at Angel Oak, let alone lending in the industry, right? So just at Angel Oak, almost 30 years of experience here. So it's and I think hopefully everyone can feel this coming through this webinar today. It's the confidence you should feel in sending your business to Angel Oak. So, all right, guys, we've talked about second liens. We do first liens, we do bank statement first liens, debt service coverage ratio, we do full doc, we do asset qualifier, asset depletion, we do it all, right? So and we talked about a blended rate calculator and all the other great tools we have. We talked about rate quotes, quick quote 247.com, and then we talked about how to get us a pre-qual. And I'm going to go back to our homepage because I probably timed out in the TPO portal, and I go back to innovative solutions for underserved borrowers, right? That's what we do here, right? We can talk about how many self-employed borrowers there are. There's over 400,000 new business applications a month since 2020. So think about that. It's the fastest growing segment of the workforce are self-employed borrowers. So if you're not out there looking for self-employed borrowers or really marketing yourself to self-employed borrowers, you're missing out on the fastest growing segment of the workforce out there. So Al, take me through how to get to this great marketing portal.
That's John, you couldn't have come up with a more perfect segue, because when I've looked at non-QM products, you figure out pretty quickly once you start doing them that you can, for marketing, this product is critical. It's critical because you can go after the groups the product is designed to serve. What are those groups? They're self-employed people, and they're people buying investment properties. That's what non-QM borrowers are. And then you can also go after their important relationships, because the products designed for self-employed borrowers can also speak to their key relationships. Who are the key relationships? Their CPA, their financial planner. A lot of self-employed people, if you talk to them, they'll meet with both once a year to develop their tax strategy going forward. These are great borrowers. The loan sizes are bigger. And, if you want to talk to, you want to talk to a CPA, you can ask them, are you interested in a loan where you don't have to reinvent your borrower's tax strategy to qualify for a mortgage? If anything's going to get their attention, that's going to get their attention. And once you have that source set up, you're not the non-QM mortgage guy. You're the mortgage guy. They don't know that they're just going to send you whoever they have for a mortgage. I've seen guys do this, and they get an FHA loan for the guy's nephew or whatever it is. So you get the idea. These products are very good for targeting both the borrowers and I've seen people do it and the sources. So as far as marketing, you can go after the groups. There's a lot of different ways to do that. You can also go after, I see people go after their own book. You look at people that have closed a loan a year or later with you. I've seen guys go through and, they've set up their CRM to send out mailers or email to these borrowers. If you're going to reach out and you want to reach out with something, this is going to give you something meaningful to reach out with.
Yeah. So Al, you talked about CPAs. You talked, the one thing I always take away is, our bank statement loan, right, for self-employed borrowers. 9%, almost 10% of the borrowers we close on that program, are realtors.
Absolutely.
And on debt service coverage ratio, we don't know what that is because we don't ask for job or income information, right? So it's probably even higher. I know Chris is smirking because he does a lot of realtor presentations on behalf of his LOs. Yes. So we're going to get to that. But Al, let's talk about the flyers we have available.
Okay, you can start with the flyers if you like. We've got flyers, we've got social media, and we have presentations. Just to add something on to what you're saying, John, about the presentations, we will come out and we will talk to your realtors with you. And also, if you can start to look for investment property buying groups with the DSCR stuff, we'll come out and talk to those. I'll tell you that guys, that if you just Google investment property buying groups, you'll find out that they've got them in counties, they've got them in the state. Some of them cost money to join, some of them don't. But the loan officers I know that go to those, they're generally the only loan officer at them. So,
Yeah, Al, you brought that up because I remember Tom Perry, he's an account executive for us in North Texas. He brought it up one time and I was like blown away by it. He Googled, real estate investment clubs and he stopped counting at 20. So when he did that, he reached out to one of his, LOs and said, hey, man, I think it'd be beneficial if we both went and presented to this real estate investment club. And when they got there, he asked the question, who's heard of a debt service coverage ratio program? First or second? I don't know what the question was. Regardless, half of the room did not know what a debt service coverage ratio loan was. They're either going hard money or conventional.
Absolutely. And, the loan officers, when I've gone to them with them, the only other lenders that are there are hard money. That's it.
Yeah.
So it's a limited crowd. It's a good group to go after. But as far as our flyers go, they're good. I've seen people, I was talking about, marketing your book. It gives you, worst case, you got a good reason to reach out for them. If you're going to try to play some odds on what these people make, you're not sure what they're looking for right now, but maybe they don't know what they're looking for the solution. They're not going to move. They're not going to refinance, but they've got a kid going to college, whatever it is, you put it in front of them. And if they're looking for it, they remember you. Or if they see it and go, oh, we can use this for sending whoever to college. So it's a very meaningful reach out.
Yeah, Al, and so we have 21 flyers out there, and we're going to continue to add and grow. But the great thing about it, I've put my information in there. So if you don't have account executive, this is actually my information. A cell phone, text me, email me, whatever, and we'll get you in touch if you don't have an account executive. But I did this on one flyer, and it populates the other 20 flyers. So we're doing other than you entering your information, we're doing all the other heavy lifting for you. So here's 21 weeks of marketing you can do based on programs. It's crazy simple.
Absolutely. And these are good. If you're talking to realtors, and Chris was talking about, doing the realtor presentations, which we do with you, we have our own decks set up. So if you're going to do it yourself, you can, contact your account executive. We've got the decks that are in the system, but we've also got our own. The first thing I talk about when I'm talking to realtors is the 1099 program, because that's how they're paid. And every single time, a lot of times they'll start talking, oh yeah, well, they couldn't get accurate income. And that's what 1099 will give them. And a bank statement loan gives them. The difference between that loan and a Fannie Mae loan is accuracy. We're going to give you an accurate income on what their business actually makes, which they own.
So Al, let's talk about the social media posts we have available.
Yeah, social media posts are great. We've got them divided up. There's LinkedIn, there's Pinterest, there's Instagram. And so they're all labeled. So you pick it underneath what kind of platform you're going to post it on, because we have the cards cut correctly for the size of the platform. So it'll look good when you post it. These aren't brandable the way that the flyers are, unless you've got software that'll cut it up. Some people will just take them and use them, post it, and then put some comments underneath, that kind of thing. But I have had people tell me that they've posted this, Facebook kind of thing, and they've gotten calls from it.
Yeah.
Just once again, get in front of somebody with a good idea, which is right now, which is a HELOC.
Yeah. And then Chris, I'm going to let you jump in here because I know you do a ton of these. Al does a ton of them. All of our account executives across the country will do. Let's talk about that realtor presentation, right? Because if we had 63% have closed that answered the poll question, have closed the second lien, that means there's 37% have not. And then you correlate that to realtors. Do they know about non-QM loans, right? The answer to that, we all know what that is, and it's less than the originators out there. So Chris, talk about that realtor presentation.
Well, it's funny you say that because I call those missionary meetings, because we're going out to spread the good word. Don't hold it together there. But it's true. Going out to spread the good word, because if you don't have that meeting, they don't know. And I found, doing this 10 years, that for every 10 realtors in that room, when I do a realtor lunch and learn, the loan officer gets one application per 10 realtors that day, because the realtors are like, I wish I would have known this 2 weeks ago. I wish I would have known this 2 months ago. Oh, I have a deal on my plate right now that I cannot get figured out. Thank you so much for showing me that. And I always feel bad, actually, because I'm like, I wish I could have been in more places sooner, but you can't. But it happens it's a 10 to 1 thing. 10 realtors, you get an application that day as a LO. We present on behalf of you. We don't have to say who we work for. If you don't want to confuse them, if you work for ABC, we just leave it at that, and you can call us your underwriter or your portfolio product specialist or whatever you'd like, because we do know the guidelines. If we've been here so long, we've helped write them, and that's a great thing about Angel Oak. They listen, and they a lot of the products we have now were semi-tweaked or created by the AEs from the outside, but it's very beneficial. And I think the realtors enjoy it because when they hit that bar to that door, walk out the room and the sunshine hits them, they all go, wow, I'm a better realtor than the guys that weren't in this room, because they don't know about DSCR and bank statements and seconds and HELOCs and asset qualifier and foreign national and I-10 and all the things we do. So
Chris, you bring up a good point. And John's asking this question here. No, John, it doesn't say anything about Angel Oak on any of the flyers, the social media posts, or on this PowerPoint deck. So nothing. And then Sean, yeah, I would suggest you running it by your compliance department before you post something, just to make sure, there's nothing, we want your disclosure, your disclaimers to be on there. So that's on you. We've created the content for you. That's as I say, that's a you issue, not a Angel Oak. But the one thing I do like, Chris, and you mentioned this, is you go on there, whether it's via Zoom, webinar, or in person, you don't say anything about Angel Oak. So I'll use JD. JD asked a lot of great questions today. So as you go through that deck and basically teaching or informing their realtor referral source or whoever their referral source is, you're not saying anything about Chris Barker and Angel Oak. You're just saying, I'm Chris, I'm one of your investors. It's like you're in the witness protection program. You don't say anything. And then if I'm doing a presentation on JD's behalf, I'm saying, what are you going to do when you find that self-employed borrower? You're going to call JD, right? You're going to call JD when you find that investor that doesn't want to have their whole REO out there for that and all the tax returns, the lease agreements. You're going to call JD. And everyone by the end of that presentation, Chris and Al, is going to say, it's all about JD. It's nothing about us as an investor to JD. It's all about JD. So I hope that's clear. I know we're getting close to the top of the hour. I want to be respectful of everyone's time. Al, anything in closing you want to share?
Yeah, just to tail on to the presentation real quick. One of the great reasons for doing this for realtors is I get the one question every single time that's a consistent question is, can I do this loan for myself? Yes. So the flyers we talked about, go take them out to realtors, because if you give them something that they can use for themselves, they'll probably care about it a little bit more. So thanks everyone for tuning in today. Remember, we're here. Remember the price calculator. We're here to get borrowers into homes or get them cash. Anything we can do, we're always happy to help.
Yeah. And Chris.
Yep. Please utilize our website. It has so much to offer there, from quick quote to calculators to marketing. And it also guides you to the best AEs in the business. Please, above all, reach out to our AEs, have so much experience. They're super serious about your success, because the worst thing that could ever happen to an AE is that they disappoint an LO. And the worst thing that could happen to an LO is they disappoint a borrower or a realtor. We lose major sleep if that ever happens. It hadn't happened to me in a couple of years, but I'm just saying, use our great AEs. They're loaded with experience and they're very serious about what we do.
Yeah, and they're all about getting deals done. And I think, I'll touch on a couple of points there. Chris mentioned an 80% pull through doing prequels up front, and if we get an exception, we're doing that at the prequel stage. So it's really, really important that, you lean on that account executive, and that account executive is going to find a way to get that deal done. And if they can't, they're going to let you know up front. So, your borrower and your referral source can move, on down the road. So in closing, just want to make sure everyone, this is a couple of quick housekeeping rules before I close. This was recorded. This will be sent out before end of day tomorrow, and everything we did today is off of our website. So there's no PowerPoint, no canned presentation. This was live, so hopefully we didn't make any mistakes here. But for anyone who's closed loans with Angel Oak, thank you for your business and thank you for trusting us. For those of you on this call that have not used Angel Oak, hopefully you can feel the confidence and sending us business your way. So on behalf of everyone at Angel Oak, thank you for attending today. Al, Chris, you guys are rock stars. I appreciate you guys for giving up your time and for your subject matter expert and the class that you guys are. And Chris, congratulations on the news. And I appreciate you guys. Everyone have a great afternoon.
Thank you.
Thank you.